Hi everyone, this is Brian Neal, founder of Tradetobefree.com and Tradetobefree.com, and today I want to talk to you about the recent gold rally that we've seen over the past few months and the rally in miners, and also want to crystallize some of the concepts of trend analysis, which is probably one of the top three concepts that you need to learn and master as a trader. You know, all great traders know and understand trend analysis very well. And right now, this gold rally gives a good example of defining different trends, a long-term trend, a short-term trend, and these trend changes when they occur. So anyway, I'm looking right now at the InvestBeFree.com site. This is the 3 Stocks to Wealth newsletter. And what we do on InvestBeFree.com is we find the top 3 stocks for the coming week. It's a site and strategy dedicated to those who want a very quick and easy way to take advantage of the top stocks in the market at the time without having to devote the hours per day trading that a lot of systems require you to do. Instead of doing all that, we find the top 3 stocks each week, and you just buy them on Friday and then sell the stocks coming off the list of top 3 the following Friday and buy the new ones coming on the list on Friday. So it's a very simple, straightforward strategy. It takes about 15 minutes per week, and it has very tremendous results over its first 4 years, and you can see that on the site if you look under the Performance tab. But I want to show you right now the top stock that we have in the newsletter this week. If you log in as a member, you'll see the top 3 stocks for the week and very simple instructions for how to get in and get out of the ones that are being taken off the list. Right now I'm looking at our top pick this week, Newmont Mining, and this will help you better understand trend analysis and what I mean by long-term downtrend and a long-term uptrend and a short-term uptrend versus an intermediate-term uptrend. This is very vital to understand if you want to be a really successful trader with most trading systems. Okay, and first thing I want to do is show a chart of spot gold over the past I think this is about 6 years, and show this long-term downtrend that's developed in the price of gold since about the later part of 2011. Okay, and we can see that downtrend, or define the downtrend as a series of lower highs and lower lows. The trend actually begins with the lower high. Okay, so it began right around here when this rally here turned over and came down to a lower low. That was sort of the start of the long-term downtrend. And we can see that over the past few years too, not only do you have that long-term downtrend, you also have the intermediate-term downtrend. And we can see this by looking at the highs over the past 3 years since the middle part of 2013. We can see that we're making lower highs every few months. Okay, now each time we have a rally, we can see it stops at a lower point. So that's the lower highs in the intermediate term downtrend. You can actually draw a line connecting these highs, and once you break out of that, okay, you begin to change that intermediate term trend to the upside. Okay, and that's what we did here in January and February this year. Okay, we can see that first move to break out of that trend. All right, and then a consolidation, and then the pullback here to about 1200 on the spot price of gold. This is the spot price of gold, which will pretty closely approximate the GLD, which you'll likely be trading, if not futures, when you trade gold. Okay, so you can see that we break that downtrend and then we pull back, and we're actually testing that former downtrend resistance here. Okay, and then we have the secondary move, and on Friday we just cleared the prior high. Okay, so that's a confirmation of this new intermediate term uptrend in the price of gold, and that may continue quite a ways. In fact, we very well may see a 1-to-1 or more projection of the first move up. Okay, this is a Fibonacci concept, and you can take the distance from the lows here in the latter part of 2015 to the highs made in February, okay, and project that distance from the lows here on this retracement and consolidation. Project that to from that point, and you'll probably be up here in the 1430 to 1530 range, which is the point where gold is likely to go in the weeks and months ahead. So after we've seen that breakout on Friday, that's key. We're taking this the intermediate term downtrend, we're breaking it with a lot of volume too. We're coming back, we're testing that former downtrend resistance, and then we're seeing a higher high from that point. Okay, so that's confirmation of the trend reversal. And you can see all these strong short-term uptrends that from here, December to the early part of February, mid part of February, it looks like that was another short-term uptrend. Okay, and now we're starting another short-term uptrend within that intermediate term uptrend now. Okay, so that's a very key concept to understand what kind of intermediate term trend you have, what kind of long-term trend you have going right now, and what kind of short-term trend. Okay, so now I'm gonna go and take a look at our top pick for the week again on investbefree.com, and I'm going to show you these different trends on this chart. Now here we can see, I think this is back in early 2016, it is January, a little after January 2016, we can see this big move up from that point down here upward. That's the short-term uptrend, okay? And then we have a pullback here. Now these are just short-term downtrends, okay, within this intermediate term uptrend that's developing, okay? And then we're confirming the intermediate term uptrend in here, and more so up here, okay? So now that we have the short-term uptrend, these short-term uptrends are very strong, and now we have the intermediate term uptrend, okay, with the higher highs and higher lows, not just on, a time frame over the past week or two or three, but over several weeks to a few months. We're making higher highs and higher lows in these longer time frames. So you can see here, you go up, you pull back, and then you go up again. That's part of the intermediate term to long-term uptrend, with the short-term uptrends and the short-term downtrends within that longer-term uptrend. So it's very important that you understand that and see higher highs and higher lows on these longer time frames. Now over here we can see that we're making in late 2015, you can see that we made a higher high, a higher low. Okay, so we had the higher low as a first step to change the trend, but we didn't quite get the higher high. Okay, we found resistance there, we fell back, and we took out the prior low. All right, it wasn't until we saw that higher high broken here in, I think, again, early 2016, that we began to really change the longer-term trend to the upside. All right, so now that we've got this longer-term uptrend that we can trade off of, now we can look for patterns. As a technical trader, we can look for patterns to trade within this longer-term uptrend, which is key. Okay, so here we can see that just last week we saw this consolidation very closely approximates a bull flag pattern. It didn't quite make the 90% to 100% move within 2 months. It took it, I think, 2.5 months to go that far higher before the consolidation. But here we can see the tight consolidation that is a hallmark of what I would call a quality bull flag pattern, where you have the big move up and then the sideways pattern in a tight consolidation with narrowing volatility, lower volatility, and these smaller candles here in the consolidation. And that's a key thing to look for in this pattern. If you have a sort of a choppy flag pattern, where you have a lot of volatility and you have a sharp pullback, that's not as good. You want to try to avoid those patterns in many cases. Okay, so we waited for this point here where it had the tight consolidation, and out of that pattern, if you get a breakout, then you have much higher probability of success. And we can see that here, that it's so far really taken off out of that pattern, and we went ahead and bought at the open after it closed above this consolidation area, okay, which is one of the entry points. You could also put a buy stop just above the prior day's high after the breakout, as I talked about in a prior video. So yeah, so this stock, the reason why it's in our list of top 3 stocks, a lot of gold stocks are smaller companies. They're not profitable, over the past few years. They're a lot more risky, but this stock has the earnings beats. It has real earnings growth. It has sales growth. It has other qualities that we look for. Okay, it has real results, and those results are improving, and the estimates are rising very quickly, and the company is beating those estimates. Okay, so we have some confidence that it will meet or beat those expectations in the future. Okay, so that's one reason why we had it in our newsletter as our top stock this week, and it's already off to a great start. I also want to show you another reason why we selected this stock to not only trade but also have in the 3 Stocks to Wealth newsletter, is that we also have gold breaking out of a flag pattern. Now this is not a bull flag pattern, this is just a flag pattern, but the GLD and the spot price of gold and the gold contracts are breaking out of this pattern after a consolidation for a few weeks. And they're doing so in a lot of volume, and they're closing near the highs as they break out of the consolidation. Okay, and that's a really good sign. And not only is Newmont mining starting to break out here, but also the price of gold is breaking out, which is obviously going to help their bottom line and help their revenues a lot going forward. And other gold stocks are also running as well. So, that's another clue when other stocks in the same industry are also moving quickly in the current market. That's another thing you want to look for when you look for a good technical trading setup. Okay, so look for those gold stocks breaking out of very bullish patterns right now. At some point, this rally will end, and we'll see a pullback. So you want to hit those ideal technical entry points, like I just showed on Newmont. And if you haven't yet, go to investbefree.com, and you can get a free video course on the investbefree.com strategy. And you can learn more about that. And hopefully you voted in our recent survey for what you'd like to see upgraded in investbefree.com. The first 4 years have been very successful for the newsletter. We have average returns in the mid double digits per year, and we expect to do that in the future. We have a lot of money of our own in this technique, along with the Tradetobefree.com techniques as well for technical swing trading. But this is also a very good strategy for those who don't want to use technical analysis, who want to just spend 15 minutes a week trading on Fridays while still earning the returns of a very good professional trader. So you'll get over to investpreview.com and sign up for that trial. You'll get notification of the upgrades that we're coming out with in the near future. We've got some really exciting ones, including a stop loss strategy that will smooth out returns over time and allow you to have more confidence with the strategy as you become more familiar with it and start using it more over time. And you can start with the simulator and paper trading and then move on to a live account if you choose. And it doesn't take much to make a huge difference in your overall account growth and nest egg over time if you're taking a small portion of your portfolio and dedicating it to a very successful, very proven strategy like this over time. So if you get those mid double digit returns per year in just 5 years with compounding, you'll be looking at a 5 to 10 bagger. So you can look at a compound return calculator online, and you can plug in those numbers, let's say 50% per year, and you'll see that happens within 4 or 5 years if you maintain that rate of return, which we have been doing with that 3 Stocks to Wealth newsletter, requiring just 15 minutes of your time each week to implement. So, definitely get over there, sign up for the video course, and also wait for that announcement of the release date for the upgrades that are coming out. You can go ahead and sign up for the newsletter now if you want to on the site, and you'll see a big difference in your portfolio returns over time with that great technique. So, okay, that's about it for today. You can look down below for those links to the site and to sign up. Be sure to like this video down below, and you'll see that subscribe button next to my headshot. Just go ahead and subscribe there and make sure you receive our latest videos and announcements when they come out.